Hey guys, this is Gregory Hinton, and I'm going to be conducting an incredible training on how to be able to use your Fibonacci tracement tool. So I know a lot of people get confused on how to be able to use the tool or whatnot, but I just want to just keep it very, very simple for you guys to be able to use it. Right now, we're looking at a pair, Euro Chef, and we want to pretty much see, what is the retracement level for this current pair. So what I would typically do is I would look at an initial huge move, right? So if you're looking at this chart right now, what was the big move? I know you guys see it from here, right, to here was a huge 160 pip move, right? So what we want to be able to find out is, now that it's made this move, what are the levels of retracement this thing could possibly hit, right? What are some of our targets? This is how we get our target zones right here. So since the market rose up from the bottom to the top, that's the same exact measurement you're going to use for the Fibonacci retracement tool. So let me go ahead and pull it out. Mine is a little bit different. We'll start right here and we'll pull it out right to the top wick, right? Boom. And then what we'll do is we'll start to examine and look at this. Look, the market and price action, it rose up to the level of 1.09715. Since then, it's been retracing. It's been bouncing off it, right? It retested this level again, and then it just dropped all the way to the 61.8. Now, once you see that the market actually has broke the 61.8 level, right? And if the next candle here closes below the level, the only thing that we should be looking for are shorts right here, right? And it actually is congruent with our whole trading strategy with the Ichimoku cloud, right? Anything below the hour on the cloud, we're looking for shorts, right? Shorts off the pullbacks. What are the pullbacks? The pullbacks are when the market moves down and it pulls right back, right? It pulled right back up to this region. And it moved back down, then it pulled right back. Moved back down, and it pulled right back. So you want to be able to find the pullback so you could place a sell at the best particular time, okay? You want to be in the right position to place a sell at the best particular time. So let's check this out. As we measured the Fibonacci retracement levels, so let me, my Fibonacci tool is a little bit different. Let me add back the values. Let me add the defaults for you guys so you guys can see the full levels here, okay? So I like to use the four levels of indecision, and that's the reason why I use the 0 level, the 100%. I use the extension of the 161.8, which you can't see because it would be below the 100. And I use the 61.8, which is the most critical level, in my opinion. Now, is there a right and wrong way on how to be able by using? No, I mean, everyone has their methodology of using the Fibonacci retracement. If you want to leave the 23.6, absolutely use it. So as you can see, the market traveled down. It didn't respect the 23.6, but right here, it actually did respect the 38.2 level, okay? It actually bounced off the 38 from here, and it traveled back up. It tested the 23.6 again, tested, and it bounced back down, tested it again, and it kind of just teetered around, went back up, tested the high, right? This would have been another great area to place a sell right in here. Right in here, right? This would have been another great area to place a sell to be able to ride this trade out from this region all the way on down, okay? So let's try to find another example, okay? Let's try to find another example. So what? Okay, before I hop to the next target part, the next target line that we would looking to hit would probably be the 100%. So this would be a TP for us. If this break and close below the 61.0, yeah, we're possibly looking for it to fall down to the 100% level, okay? So this is how we're able to kind of get our TP projections right there on the charts for you guys. Okay. Let me see if I can find one for a downtrend. Second here, let me see if I can find something for a downtrend for you guys. Find a good downtrend. Okay. Okay, so let's use this. So as you can see, the market broke through the cloud. This was the major move here, and then it pulled back up to the downside, right? So how would we use it here? So we could actually take out the Fibonacci retracement tool. Since the path was down to the downside, we're going to measure from the top wick all the way down to the bottom wick here, right? And we'll see what type of retracement levels this actual pair has actually been hitting at this current time. So if you take a look at it, the market traveled down, it hit the 0% line, bounced back up all the way to the 61.8, okay, all the way to the 61.8. Then it pulled back down to the 38.2, which you can see here. It kind of teetered around in here, and it bounced back down and tested the lows again, and tested the lows. As you can see, as the market started to travel more, right, the market actually retraced back up to the 61.8, tested this region. You can see the market exhaustion with the wicks to the upside. 1, 2, 3. This would have been a great place for a sell. Probably here to be more patient. Right here would have been a great place for a sell, and then you would have actually got in. Okay, so right around that 61.8 level was the decision time, the decision area, zone, I would like to call. And this is where you would place yourself as it worked through its levels, and it broke through this level here. Okay, let me see. So what you want to be able to do is really take your fib extensions out and just start to practice. If you see a big movement like this, get your fib extension out and retracement tool out and just bring it and just practice. And then see the story of the market. See how the market actually traveled and respect these different zones. Wow, it didn't respect the 23.6 initially, but it did respect the 38.2. Then it tried to break through, try to go back up and retest the 23.6. Didn't quite make it, bounce back. So tell these stories to yourself so you can visually see this. When you're looking at the charts, you want to be able to tell a story, to see where the market is going. One thing that was a good point that Mr. Stevenson Lindor mentioned the other day was, our job is not to actually predict the market or know where the market is going. Our job is to react. We don't really have any bias if it's going up or if it's going down. Our job is to simply react. When we see that the market has moved past a certain strong level, like a 61.8 level, like down to, we're looking for shorts, right? Or if it travels above, like you see over here, we're looking for buys, right? This was valid. You're looking for buys all the way up here, then it retraced back down, okay? So that's my time on this quick video. I just wanted to do a quick video on Fibonacci, the Fibonacci retracement tool. I think that you guys could really benefit from this. You're going to want to practice this each and every day. You're going to want to be able to use this in your trading. And I think that once you're able to start mastering this, you'll get a more clear picture on where the market is going. And then you can make a more confident decision with the type of trades you'll be taking. Once again, this is Gregory Hinton from Self Paid. You guys have an amazing day. Take care. Bye for now.